Thank you, Clive, and welcome, ladies and gentlemen. I'll start with a picture of the Breakfast Creek Hotel. That is the most famous pub in Australia. Just ask anyone from Queensland. It says the Angler's Arms at the bottom, and apologies for that. It should say the Breakfast Creek Hotel. On another page, I do show the Angler's Arms. Okay, what I'll cover today is, this is our results presentation. I won't run through our results, but I'll start with the background of ALE, because for some of you, ALE may be a company you're not familiar with. I'll start with that background. I'll touch on the results very briefly. I'll talk to what I think you'll find most interesting, and that is a number of developments on our properties in recent years. I'll talk to our capital position or our capital structure and the outlook for financial year 19. I'll just leave this up on the slide behind me, but perhaps if I just outline ALE. Back in 2003, Foster's owned a very profitable and market-leading pub group. It had two components to it. One was a pub operating business that owned all the licences and all the operating aspects of the pubs, and they owned a large pub property portfolio. They spun both out into two brand new IPOs, and if there was anyone in these rooms that participated in those IPOs, ALH was on the markets for around 18 months before it was taken over by Woolworths and Bruce Matheson. And they paid circa $1.3 billion for the business. That is the entity that pays ALE Property Group, the property owner, rent for many years into the future. The structure of our rental arrangements are unusual, almost boring. The initial term is a 25-year term where the rent's increasing by CPI each year. And yes, that's unspectacular. At year 15, which is the end of this year, there's our first market rent review, where the rents on the individual properties can increase by up to 10% or fall by up to 10%. At 2028, the end of that first 25 years, ALH, the tenant, has the opportunity to extend the lease by up to 40 years. So the leases have, as you'll see in that first column, up to another 10 years to run, but potentially as far as another 50 years into the future. We own those 86 properties, valued today at around $1.1 billion. The yield on those properties around 5%. That's the rent as a percentage of the property value. The rent increasing by less than 2%, being CPI where it is today. And across our 86 properties, 100% of them are occupied by ALH. The capital structure is, in our view, prudent and conservative. We started with gearing in 2003 at 88%. That's when we had a 25-year lease. We brought the gearing down to 41.6, an all-time low. We have our debt maturity spread over time and hedging. If you look across real estate investment trusts in Australia, we would expect you will find that ALE has one of the most conservative hedging positions. We have 100% of our debt hedged for the next 7.4 years. On what is a very cost-efficient all-up cash interest rate of 4.25%, and investment grade rating from Moody's. Our equity performance has been strong over the last many years, and I'll run through that in detail, but the distributions we are paying at present are 100% tax deferred, and our market capitalisation just over $1 billion. There's the Angler's Arms Hotel at Southport, just near the Gold Coast. That used to be a 1950s, 1960s pub, completely knocked to the ground, brand new pub, and a brand new Dan Murphy's added about 2-3 years ago. I won't run through all those details. I'll stop here and just give you a sense of the very few moving parts of ALE. We receive around $50 to $60 million of rent each year across the 86 properties. We earn a little bit of interest income. We pay borrowing expenses, all fixed rate, and we have an internal management structure such that the management company is within the entity, so there's no leakage of outperformance or anything like that. And we pay land tax in just one state, that's Queensland. The tenant, under what are called triple net leases, paid land tax in each and every other state. The distributable profit of just under 30 million and a distribution of 20.8 cents. Very openly and transparently, we pay more than the distributable profit and we pay that out of surplus cash. Why? Because we are keen to maintain gearing in the trust through time. Okay, that's one of our properties about 30 minutes outside Melbourne on the corner of Burwood Highway and Springvale Road, 4.5 hectares. Now what does that mean? The same size as the Melbourne Cricket Ground, including the stands. It has a very, very large pub on the site. It doesn't look so in that picture. It has also a more recently added Dan Murphy's on the same site. And lots of car parking. Back in the 1960s, when it was a good idea to drive to the hotel, and perhaps not such a good idea to drive home from the hotel, you needed that much car parking. So in the future, it'll be interesting to see what the opportunity for that site might be. Who are ALH? Well, they're a very credible organisation in their own right. Number one, firstly, they are the number one pub operator in Australia with 330 pubs or licensed venues, 550 bottle shops, that includes BWS and Dan Murphy's. They're the brands that you'll recognise as you drive around the capital cities of Australia. ALH, as I've mentioned, 75% owned by Woolworths, 25% by the Matheson Group, and they are not just the biggest pub operator, but also the largest liquor retailer in the country. Credible in their own right, they turn over $4.3 billion and an earnings before rent of just over 800 million. But the most impressive number on this page is the earnings before rent as a percentage of the revenue at nearly 19%. That's probably one of the most profitable retail businesses in Australia. The properties, as I said, 86 properties, mostly on the eastern seaboard of Australia. You'll see that Victoria has almost 50%, 31% in Queensland is the next largest, and New South Wales. So metropolitan locations operating in their current spots as pubs for more than 60 years. I'm often asked the question how you should think about the value of ALE's securities and the value of ALE's properties. There's clearly a rent stream, and that is, for most years, last year's number increased by CPI. There are market rent reviews, and that's the future income we're referring to at the end of this year, and in 2028 there's opportunity for rent reviews where the rent can, yes, I'll start with the negative, reduce, or there's the opportunity for it to increase. With ALH and Woolworths spending hundreds of millions of dollars on these properties over the last 15 years, adding the Dan Murphy's, refurbishing the hotels, in some cases knocking the hotels to the ground and putting up new hotels, that has added very materially to their earnings, and that's very positive for future market rent. In terms of long-term value, 95 hectares of land, or if you like, 950-odd thousand square metres, nearly 1 square kilometre of land. Sitting here in Sydney, if you started at Bridge Street to the north, went all the way down to Park Street at the south, on the east started Macquarie Street, and then went all the way to the Sussex Street in the west, that's what 1 square kilometre of land looks like. And only 25% of that 1 square kilometre is occupied by pub buildings. As the Burvale Hotel showed before, you do need car parking around hotels, and over and above that, there is significant spare land. What's happened to our yields or cap rates over the last 10 years? Well, they've fallen by around 120 basis points, or 1.2%. On the other hand, the grey line you'll see on that page are the bond rates, Australian government bond rates, which have fallen from 6.45 down to 2.6. Now that's 370 basis points, so a significant fall. We would expect, with the money spent on the sites and the market rent prospects as we draw closer to those market rent dates, that will have a positive influence on the future cap rates. But as you'll see, there's a significant buffer there for potentially higher rates. I'll also pause on this slide to sort of ask the question, 12 months ago, if I was to say to you, I think that 10-year Australian government bond rates are going to be much the same in 12 months' time. I'd expect, if I asked for a show of hands for those who disagree, I'd expect this room to be hands up everywhere. That's what's happened. In the last 12 months, long-term bond rates have remained pretty much unchanged. Time will tell what it is in the future, but there's a significant buffer. I'll run through now a couple of case studies of where ALH, the tenant, has spent money on the landlord's property. Not because they're a charity, Woolworths is a commercially vigorous organisation, but they do it simply to improve their own earnings opportunities at the sites. They've added a Dan Murphy's 1 week before Christmas at the end of last year, good timing, just north of the Gold Coast Airport on Miami Beach. You might know Burleigh Beach even better, on what is a very large site. And it'll be interesting, while there'll be a refurbishment during the rest of this year, time will tell what the opportunity for that site is going forward. The Gepps crossover in Adelaide, voted one of the best redeveloped hotels, brand new hotel and brand new Dan Murphy's. We may be able to show a video at the end showing what that looks like on a drone. Accommodation. Back in the 60s and 70s, people loved to stay in hotels above pubs. Today, it is, again, more fashionable. Nightcap hotels, that's the branding that ALH uses. Across our 27 properties, nearly 500 rooms. That was just 428 last year. Federation Square, Flinders Street Station, if you know those locations down the CBD of Melbourne, opposite is the Young and Jackson Hotel. The Victorian Government, in partnership with Lend-Lease and others, are planning a $6 billion metro development. One of the stations will be right around and underneath our hotel, called Town Hall Station, and we're looking forward to that providing even more foot traffic in what is probably one of the most famous intersections of Melbourne. The Crow's Nest Hotel, a bit closer to home, about 10 minutes from here, major refurbishment 3 or 4 years ago, which doubled the footprint inside, and a very popular hotel. Okay, our capital structure. I've run through most of this already. Very conservative, low cost and efficient. If you like a picture, we don't have any debt maturities for 2 years, and then 4 and 5 years into the future after that, 100% hedged for 7 years. To give you a sense of how comfortable we are around our capital structure, we could see 30% of the value of the properties lost before we came up against the closest debt covenant. So lots of headroom there. You can't have too many pictures of the Breakfast Creek Hotel, and this time I've put the right name at the bottom. Okay, so what's the outlook? And I've got 2 minutes left to run. I'll run through this quickly and just check if we do have that drone available to us. No, so I'll keep talking. Sorry, you'll have a less entertaining time. In Queensland, land tax has been increased. I'd like to think we can control the Queensland government, but they passed the laws and they've increased the rate from 2 to 2.5%. This is the only state in which we do pay land tax, and that'll increase our land tax bill by around $700,000 in financial year 19, or 0.4 of a cent. To give you some perspective, we paid 20.8 cents last year. So it's material, but certainly not fatal. In terms of market rent reviews, I'll set the scene. We currently receive a rent that's increased by CPI for the last 15 years. With the money spent on the hotels and the very profitable position of them, we understand and have a view that the market rent should be higher. That difference isn't even across the 80-something hotels that we'll review this year. So we don't expect all of them to necessarily increase by the full 10%. We'll be having discussions with ALH, and there'll be negotiations and potentially determinations as the year goes forward, and we'll update the market as and when we have a conclusion. But can I say, as we've been through the process, we've been particularly encouraged about what that means for our 2028 review, which is completely uncapped as opposed to the 2018 review, which can increase or decrease by 10%. Bring on 2028. For those of you who like details, they're all the properties that are reviewing this year at the top in bold, and others in years to follow. But let me finish now with a summary of ALE. A high-quality pub property portfolio for all the reasons I've outlined. ALH is the largest pub operator in Australia, very profitable. They have long-term leases, and we enjoy the income from those properties for at least the next 10 years, more likely closer to the next 50 years. There's the opportunity for market rent increases in the future, and the capital structure, low cost, low risk and efficient. Our aim is to increase distributions by CPI, albeit at the end of this year, following the completion of the market rent review process, the board will look at what the results of the review are, they'll look at what the property markets look like, what the capital market conditions are, and they'll take a view as to what future distributions should be and what our capital management policy might correctly be. So that's just a healthy reset at that time. That's another site of ours, 3.5 hectares, and my time is up. That's our performance over the last 15 years. You'll see we've outperformed not just the real estate investment trust sector, but also the All Ordinaries Index. Thank you for your attention.